And good morning. This is the Eye of the Storm podcast with the Elliott Wave weekly update for the S&P 500, being recorded on Saturday, September the 27th at 10:50 a.m. Pacific Daylight Time. As always, I'm going to start here on the cash market, the SPX, and I'm on the maximum monthly chart. So I have the maximum amount of data available. And if this is your first time, this is where I begin. I review my largest count that I'm working with, and I just kind of give you a quick review that this particular data goes back to January the 1st of 1928. So we have quite a bit of data, uh, 97 years to be exact. So anyway, jumping right in, my largest count, we start with the Grand Supercycle, and I didn't design that. That is came directly from R.N. Elliott from his original works that he presented using the Dow Jones. So we have Grand Supercycle Wave 1. That's the largest that's available to us. And to understand, Grand Supercycle is decades, decades in on progress. And so it's actually centuries before I think we would get to, or at least 100 years before we're going to get to the finishing point for Grand Supercycle Wave 3. All right? It's pretty wild, but that's how big this particular cycle is. So Grand Supercycle. We have Grand Supercycle Wave 1 topping in 1929. Then we have Grand Supercycle Wave 2 bottoming in 1932. Those were set by Elliott himself. And so I built from those. And so next one down is supercycle degree. And therefore we have 1 and 2. So let's just go over that. If we understand Elliott wave shows us that the markets operate in 5 waves in the direction of the trend. The trend obviously is up. And so we have 5 waves to build on, of which, excuse me, on the Grand Supercycle, have only got 1 and 2. So what's going to be inside Grand Supercycle Wave 3 are going to be 5 waves of supercycle degree. That's the sky blue, of which we have 1 and 2 complete. So what's going to be in Supercycle Wave 3? 5 waves of cycle degree, of which we have 1 and 2 complete, and we have very close to finishing cycle wave 3. And so working from there, once we have cycle wave 3 complete, we'll be inside a cycle fourth wave. But in essence, what I can say from here is that we are in cycle wave 3 of supercycle wave 3 of grand supercycle wave 3. So we're in a 3 of 3 move. And again, if you're studying Elliott, Elliott wrote that it's the third wave that's normally the longest and the strongest, any part of an impulse move. Now, remember that impulse can go up or down. In this case, the cycle, since we're starting a grand supercycle, that cycle continues to suggest that our impulses will come to the upside. And that's going to continue for quite a while. But that's not to say that we don't have impulse moves to the downside in these larger corrections. Okay, so going on, we're inside cycle wave 3. It's going to consist of 5 waves of primary degree, of which we have 1, 2, 3, and 4 complete. And that puts us in primary wave 5 off of the 2009 lows. And then what do we have within primary wave 5? 5 waves of intermediate degree. Now I'm going to bring it down to the 5-year weekly chart, and you'll see there's intermediate wave 4, intermediate wave 3, intermediate wave 4, and that puts us in intermediate wave 5 up. What's going to be inside again? 5 waves of minor degree. 1, 2, 3, 4. We're in minor wave 5. Now, hopefully you're catching on to what I'm talking about here, is because what Elliott wave truly are, building blocks. I'm going from the highest that we got down to the lowest that we have. But when you're just starting, you kind of got to do it the same way. But 1 degree when we're done, builds to the next degree, builds to the next degree. I started with the grand supercycle, so we're working it back down as we're showing the progression. So intermediate wave 5 is going to consist of 5 waves of minor degree, of which 1, 2, 3, and 4 are complete. So we're in minor wave 5 of intermediate wave 5, a primary wave 5 of cycle wave 3. That's how you would list that large count that we're working on. All right, I'm going to come down to the daily chart. Again, we're still in the cash market. So we're going to go through, and now here we can see the internal for the minor fifth wave. What's going to be in minor 5? 5 waves of minute degree. So let me just go back very quickly so I can go down. Let's go to the maximum monthly. There's the key. So we have grand supercycle, supercycle, cycle. So what do we got? Primary, intermediate, minor. So that's minor 5 that we're in. Minute, which we have 1, 2, and 3 complete. So we're in minute wave 4. And then we have sub minuet, or I should just say minuet degree. Now I should change that. That's a little bit mislabeling. So it is minor, minute, and then minuet. And I've got to change those because I'm spelling them wrong. I'm just realizing that. I will change that. But back to that daily chart. So we're in, there's minute 1, minute 2, minute 3. So we're in minute wave 4. How close does that put us then to this top for this cycle wave 3? Very. So we're in the minute fourth wave coming down. I'm going to bring this down quickly we're on the daily. I'm going to bring it down to the hourly. And actually, let me bring it down to the 4 hour. I need a little bit more. There's that minor 4. There's 1, 2, there's 3. So now if I bring it down, we're going to bring it down to where we're here. And that's the minuet wave 4, which was a running fourth wave, and that to set us up to go into, uh, sorry, to finish was we have minuet wave 4 and then the 5 up to finish minute wave 3. So we're in minute wave 4. But I'm just telling you that because when I bring it down to this hourly chart, you're going to see my starting point is here. That's that minuet. There's minuet 5. There's the completion point for minute wave 3. So we're at minute wave 4. It's going to consist of an ABC of minuet degree. And this is where the labeling now comes into play. This past week has been interesting because early in the week, I've actually after Monday, I had put in the top for minute wave 3. So initially, I had left open the possibility that we were coming up in this subminuet wave 5, and it was breaking into a diagonal triangle, an expanding diagonal triangle at that. And so we would have had, this would have been that subminuet wave 4 would have been here. And with that being the case, it really came down too far. So that got knocked out. Minute wave 3 went up there. So the 5 and the 5 of the 3 went up. And now we're working on minute wave 4, which is going to have 3 waves, ABC of minuet degree. Here is minuet wave A. Now, I had to break this down, and now I'm going to go one more click lower to that 15-minute chart. We need to look at all this internal. And it's important right now because what we're finishing is the minute fourth wave, leaving us with a minute fifth wave up, and then it's done. Now, how long will that minute fifth wave take? Well, that's to be determined, but I would assume that it's probably going to be at least 6 to 12 weeks. So minute wave 3, excuse me, was 3 months. 6 to 12 weeks just actually takes us to half that, 3 months. So we started here in September. So what are we looking at? October, November, December. Before, if wherever we finish minute wave 4, which I think will be in October, then we have the balance of the October, November, December, and probably and possibly into the beginning of January. Now, I get some confirmation because I use artificial intelligence, I use AI to kind of figure what the path that the S&P is going to take. And it does continue to suggest and show that when it scrapes and it collects all the data that's available on the S&P 500, that we should be expecting a surge, a thrust higher within the fourth quarter. And that fits for a minute fifth wave. So what would that minute fifth wave be able to do? It should take us again to new all-time highs. And so that brings into that picture for that larger picture. Let me get through this minute wave four, and then I'll cap it by talking a little bit about the oncoming or the expected minute fifth wave. So here we are in four. It's going to consist of an A, B, C of this color. So that's, if you're using my key, color key, the lavender, the purplish color, that is uh, minuet degree. And so we have an ABC down. Now remember that when we're working this correction, there are between 11 and 13 different variations outside of the basic, right? So let me explain. Uh, a corrective phase can be a zigzag, which would suggest the A wave's 5 waves, the B wave is 3, and then the C wave is 5 waves again. And so you're getting more of a zigzag down or a zigzag up. But this one is best counted as A, B, C. Now, could we say it's a zigzag? Well, sort of we can. I can basically say here's the A, here's the B. So the A was 5, the B was 5, and the C was 5. So it's a 5, 3, 5. But you can also consider it possibly as just an ABC instead of 5 waves, because that's where I start to have the problem. So let me explain one step further. It could be a 5, 3, 5 zigzag for wave A. Now, there are others where wave A could be clean, 1, 2, and then we have 1, 2, 1, 2, 3, 4, 5, 3. So it ends up being off of this level, 3 waves down. But from here, I could probably 5 waves for wave A, 3 waves for wave B, 1, 2, 1, 2, 3, 4, 5, 3. So it kind of fails us a little bit. I could put 1, 2, 3, 4, 5. So 1, 2, 3, 4, 5 for A. So there's 2 ways that I can label it. I'm feeling more comfortable labeling it as ABC, which then suggests, right, a straight ABC rather than a 5. So when the A wave breaks into an ABC, what it also tells us that we run the possibility that the B wave can turn into a flat. So this, again, going back to what Elliott teaches us, the two forms that basically corrective phase can take to begin. A 5-3-5 would put us into an ABC down, 5-3-5. But I can also, if I can put 5 waves down, then A is 5 waves. So the overall larger pattern for wave 4 would be a 5-3-5, a zigzag. But because I'm feeling that here, that it's better counted as an ABC, well, there still could be 5-3-5, but it's an ABC for wave A. That then it flips it and includes this whole pattern, fits into the flat category. So again, the two categories, the two structures that a corrective can take. If it's a flat, then we're getting a 3-3-5. And the flat means that the A comes down, the B could go back almost and touch that top level. That would be absolutely flat, right? So A and then B is same length as A. And then the C wave would also be the same length again. Now, That's kind of where I'm looking at. So, and it's going to be different than in the NASDAQ, by the way. NASDAQ is a little bit different. NASDAQ looks like the whole pattern will be a zigzag. Whereas in the S&P, we need to now use it as a flat. Now that changes the trajectory of what the overall pattern, how deep it can get. And I'll go over that again in a moment. So, but working the internals here. So I've got an ABC for wave A. Then I have A, B, and we're working a C wave back up to finish the B wave. Okay, so wave B will consist of three waves. There's wave A, there's wave B. We're looking for a C wave. Wave A was three. Wave B was also three. And then and C waves, under Elliott, all C waves must be five waves. Well, we have one, two, 3, 4, 5, 3, 4. So we're looking for a fifth wave up to complete wave C and put the B wave. After that, we're looking for a C wave down. So let's take a look at what we have in terms of our fib. So Fibonacci relationships, so we can put Fibonacci levels out there. So now we have an idea of where can wave C come into and complete. So the breakdown is the purple colors, that's for the whole B wave. Then I have the breakdown inside, so the goldish color, that's the sub-minuet waves, A, B. And so we look at those, okay, we're connecting A to B, and now we're looking for what can wave C give us. The most common fib level for a C wave is that it's compared to the A, and that's equality. So equality would put it at 6684. So what we're looking for is an A, a B, and we got the C wave up to here at 6684. That would then complete wave 5. Now, let's take it one step further. We're in wave C already, of which I believe we have 1, 2, 3, and 4 out of the 5. So we're just looking for wave 5. So I've run again. Now we're using still Fibonacci relationships, but when we're counting it within a fifth wave, within a 5-wave structure, well, then we go through a little different pattern. That is where then the Fibonacci relationships come in, because we're in wave 5. It is related to wave 1. So here I run my fibs, and I'm going to use an extension tool. And here we have wave 1, and that then goes over and goes to the low of wave 4. Now I've got Fibonacci levels that will fit what the expectations we may get from wave 5. The most common relationship between a fifth wave and a first wave is, again, the equality. Same thing we're going out, right? When we're looking at a C wave to an A wave, it's equality. And here on the way up, our equality comes to 6684. Well, down here, now let me just state, most common, 100% equality. Next would be 1.618. Not looking for that because I'm really not looking for this to go over and make a new high. So I got the 100%. So the third most common is 0.618. And could this C wave stop at 0.618? Well, let's show how. First of all, here we have on this level, the B wave, 618 of wave A comes in at 6649 or 6650, let's say. Then we have the C wave, which could come in at 0.618. That is 6653. Okay? Now that's another level. Now we're building a little bit of a cluster of resistance that could complete the C wave and the B wave. And that's setting the stage then for a C wave decline. Okay? So here we are. We're trying to figure out how high can the market get. Well, we have a cluster right there. Now we're down to the next level. So there's the minuet. Here's the sub-minuet, the C wave, and now we're inside for the sub-minuet fifth wave. Now, wave 5, what's the first most common? Equality comes in at 6657, 6658. So now we have built a zone here between 6650 and 6658, all filled with resistance levels that could complete the C wave and then in turn the B wave. And that's what we're looking for. All right, so what happens if it surpasses this? Our next sequence or our next level comes in here at 1.618 for this fifth wave and 0.786 for this B wave. And that comes in at 6670 pretty much. I believe this is 71. So it's, basically the same level. 6671, we'll call it on both. And we're going to make a little bit of room, 70 to 75 or 68 to 72, whatever you want to call it. We have a little bit of wiggle room there just because the markets are the market. Now, that would be our second resistance cluster. Where's our third? Right above it. And that would suggest the C wave goes 100%. That is the most common. That's 6684. Well, what does that say for the fifth wave? If the fifth wave overshoots 6684, our next level on this degree would be 6692, very close to becoming where wave B is equal to wave A. But it can be expected. Why? Because it falls within the two structural patterns, one being a zigzag, which it's not because of the way I've counted wave A. So it falls into the flat, where there's wave A and then wave B will be equal to wave A and wave C will be equal to wave A. So all of them fall into this box, so to speak. Now, so we do have that resistance level. Now, one other thing that could happen, and I somehow am not necessarily looking for it right off the bat, but if by chance something comes in, sparking the market, sparking a rally, pushing all of the prices higher, because this is part of the flat family, that would suggest or leave open the potential that the B wave can turn into an irregular. Those of you that have been following me for a while, I speak about irregulars quite often because we find them pretty often. We're now getting them in a wave 2 position, and we also more commonly will find them in a wave 4 position. So and what that would mean for the B wave, we can get irregular, and then we're going to come above this level, and then we'll be looking at the possibility of 1.236 above or 1.382. Those are the two fib levels that we would include if we were to go into that irregular. And I'll just add them. I'm not suggesting that this is what's going to happen, but we're just going to put them in there and so that we can see what our potential is should the market begin to push higher quickly. And there you have 382 is 6730. 1.382 is 6749. Still, all of this, by the way, I believe, is still going to keep us below that our all-time high. Nope, it won't. It's going to take us above. So in essence, if the B wave, it's the futures market that actually wouldn't. But back here in my 15-minute chart, if we're going to keep that in line, we would be making new all-time highs. Is it possible? Yes. Would I expect it? Not at this juncture, to be honest with you. It's not something that I would look for as a stronger possibility, but I can't rule it out. So I'm not going to leave them there, but I'm showing you what the potential could be if we get up towards that 6699, 6700 area. That's the all-time high for the SPX right now. I think we can get close. If this is going to be an A, a B, and flat, that's as close as we can get, right? We can get there. But that would be an extended fifth wave. So how am I lining this up? This is number one. This is our lowest, and there are 3 points within it. This would be number two, but only 2 points in it. And then again, we have number three that has 3 points in it, 3 resistance points to fulfill the ABC or the B wave up. First is the one I'm looking for. I think we can get up into there. We'll stall, and then we'll start to come down in the C wave. Now, going back out to that hourly chart, what happens? What is this C wave? Well, one other thing that I'm showing you here, I'm going to move this back over, is that I have these fibs out here. Why? Well, I'm using those for the minuet degree. And I have minuet A, minuet B, those are these purple, and then I'm going to have a minuet C. So in essence, just using the fib levels for this distance here, from the bottom of minuet wave 4 to the top of minuet wave 5, to give me a guide to where I think this fourth wave can come back in. If we're just taking straight fibs on that minute degree, well, that's going to show us here, right? Because we are correcting the minute third wave. But we've already seen where a lot of it, they come in higher than we should think. So right off the bat, the first place I'm going to look for that minute 4 is back to the fourth wave of one lesser degree, and that's this one right here. So in essence, what we have is from this point, or we could also use the D, down to the wave E, or where that fourth wave got marked. Now, bringing it back down, putting it back out here, there's the wave D, here's the wave E. Now, if we're just using the fibs that are coordinated by that third wave, we're coming down below that level, and we have 6320, and the next one down is 6088. If things get really hot and heavy to the downside, yes, those can come into play. But guess, this would then likely have to switch out. And right now it's 3 down, so I'm still going to call it A. Wherever this comes in, I'm going to call it B. It's a flat. So I'm not necessarily even looking for this. What it brings back in now is these, right? Because I'm still looking for that minute 4 to come back inside the price territory of the previous fourth. And that level does it. 64.89. Now we're inside the price territory of the previous fourth wave. Now, granted, the terminus, the endpoint, is often at the endpoint here. So that still remains, but it's not a rule. It's a guideline. So, and that guideline also is that the fourth wave will come within, a fourth wave in motion will come into the price territory of the previous fourth wave of one lesser degree. One lesser than minute is minuet. There it is. And this brings us in. So I'm just putting my fibs together as the market trades out, and we can put an A, we're going to get a B. So we're already understanding it's in the flat family. So we're already likely going to be going beyond here, but by 100 points, or not actually, by about 70 points, 60, 70 points. And in the S&P, that's fairly large. But I think it's capable, and it's going to be more probable if we hold this lower level. Instead of being totally flat, we get up there kind of in the flat and gives me a cleaner C wave and a shot down to here. Now, this is how I put that together. Does not necessarily suggest or mean that's the path. But I start to build my case for it by putting together my Fibonacci levels along with the Elliott, along with how is this fourth wave going to be. It, to me right now, is looking like it's going to be a flat, an ABC flat, which essentially tells us that wave A and wave B should be about the same length, and then wave C should be about the same length as wave A. Now, so no matter where this ends, if we get here, we're going to run those same fibs down and then up to the completion point for wave B, and that will start to lay out wave C. And if we get into this zone, I pretty much guarantee you that's where we're going to end up is down here. So hence another point of if we finish here, I'm looking for here. If we finish up here, I'm going to raise this up. Still probably this higher level. All very important. So Let's kind of keep that together. And I'm going to leave that now. Going back out, what essentially now do we have left for any upside moves? They're all gone except for one, and that's the minor, right? Let me go back all the way out to that daily. Minor wave 5 still has a fib at 3.618 at 7,092. The others I've taken off because of the restructuring that we have. Once I do get a fourth wave, I will take wave 1, move it over to wave 4. And then we're going to start to fill in all of this. But because you see, that first wave was pretty large. So no matter where I start to connect it, we're going to be up here. We've already got almost to 6,700 in the SPX. So when we're done and we're going to move up in a fifth wave, is it really out of line to expect 7,000 or 7,200? We'll start to have our levels. And I got them all. I took them all down. I will be replacing them. I left this one because it's still in play. But I'll fill it in on back on the intermediate degree and then back on that primary degree as well. We can put those in. And so you're going to find that we have levels that take us above 7,000. This is basically almost 7,100. We have levels that take us above there, 72 to 75. So there is that potential. And again, AI continues to suggest that we're going to get a surge in the fourth quarter. What's going to be behind it? I don't know. I just know that that's what is being forecast out. We can't forget, we're going into third quarter earnings mid-October. We'll begin yet again another earnings season, which it does feel like because it's true. We're rolling from earnings reports, earnings season to earnings season to earnings season as we progress through our year. So now we're into third quarter earnings. I think they're going to be a little bit less than what people may be expecting, this huge surge, but probably enough to get us that surge. Now let's consider something. We're trading at 6,600. Is it a far-fetched that between all of the 500 companies that are going to be reporting earnings in the SPX, that some might be good, some might not be so good, some will be lukewarm? Not at all. There are companies that are continuing to show that they're money makers. So, yeah, we got adjustments here. We have others that are doing great. So, yes, I think it is very possible that the market could tack on 400 to 500 points during the earnings season. And anything else that may come out, any changes to the inflation picture, any changes that could lead the Fed to give us another rate cut, another 25 basis points creates a lot of volume to the upside because rates are coming lower. Money is becoming cheaper. Getting, it goes down to mortgages, buying a car, credit cards, everything. We start to see rates come down. Maybe not credit cards, but we see rates come down in so many other areas. So that produces more money in investors and we go up. So again, it's all there. We just have to wait and see how the market and what actually is going to come out. But that's what AI is showing. Now, let's go over and take a look at the ES. Future's not going to be that much different. I'll tell you the biggest difference in the futures market, of course, is that the cash trades 9:30 a.m. to 4 p.m. Eastern. That's it, Monday through Friday. The futures market, first of all, trades an extra hour after the 4 p.m. close in New York and has a secondary close at 5. The equity markets, right, all of those stocks, they continue to trade at least until 5, maybe even a little bit later. And then they do close, and then they reopen during the European session. And so we're starting to trade again. We have Globex, though. The Globex market reopens at 6 p.m. Eastern. So in essence, the ES is closed for 1 hour. For 1 hour out of 24. The future, the cash market, nah, they're closed a lot longer. So I work my count in the cash market and then bring it over here to this market, to my futures market, and they really do need to agree. Now, there's also premium in the future because of interest. You're going to buy this, you're usually buying it on margin because it's a gigantic number, and you pay margin, you pay interest on the money you're borrowing to have the position. So there's that. But that premium in the future also is subjected to theta, which is nothing more than decay. More applicable to options, but it's going to cost less each day to carry a position in the S&P because it's 1 day less of interest. So the futures price in terms of parity to the cash market lowers. I think we started at about $59 when we rolled from September to December. There was a $59 premium future over cash. I think we're now down to 56. Maybe by Monday when we come in, it'll be 55. And it'll slowly just keep walking itself down. Now, but right now, we're dealing with that 50, I think it's 58 or 57 number. Here we are, futures market. We're in that we're in that minor wave 5. And then we have minute waves 1, 2, and 3. Let me get out of that daily, bring it down to that hourly, and we're going to walk inside this thing. Here we have, there's that minuet 4, there's the minuet 5, and there's the minute 3. Our first calculation that we put up for minute wave 4 brings the market back to 63.71, and basically on the nose is equal to the low of that minuet 4th wave. Again, minute wave 4 should find its terminus, its endpoint within the price territory of the 4th wave of one lesser degree. There it is. There's the high, there's the low. Now, so using those same fib levels of where I think all of this can come down, well, we're just above it. So that does not suggest or does not mean that the market has to get in here. Remember, it's a guideline. So what am I going to be looking at much cleaner, much closer here? Structure. Now, again, in the S&P, I'm already on that one. So I want to bring it down to that 15-minute because we're going to go inside all of this. Once again, there is the possibility, but I'm a great believer in that I've got at least between the S&P, the cash market, and the futures market, I need to have the same labeling. Now, because there is that possibility that this is 1, 2, and then I have 1, 2, but then you see 1, 2, 3, 4, 5, right? So no matter how I count it, it's either a runner, and this is all 4, and now we can't because we're overlapping. So you see how I've backtracked and I went, okay, if I have to count this correctly, it's an ABC down for A, there's the B, and then we have 1, 2, 3, 4, 5 wave C. 1, 2, 1, 2, 3, 4, 5. Wave A. Wave B. 1, 2, 3, 4, 5. Wave C. So again, I got 3 waves for wave A. And they're equal. Right? So in other words, that the labeling for the futures market or the cash market and the futures market match. And so what does that do? Same deal. It puts us into the B wave, which we have. We have the same moves in place. And so what we got going on here, we have the ABC, and now I can run that. That's just for the B wave, right? So all I'm doing is running the retracements. What's most common for a B wave? 618, 50 to 618. I'm including 618 to 0.882, but because it could be a flat, we have to consider that it can come all the way back up to 67.57, which is that high. This is off by a point. So it's up here one more. So a little bit higher. And that the B wave can get up there. And I cannot toss out the window and say, not possible, that B wave goes irregular. I'm not looking for it, but I can't ditch it. It's there. I'm not even going to put those numbers up because I'm thinking that we're going to get, and I'm going to go on and tell you why I think we'll probably finish up in here, come down in that C wave, finish the whole thing. Okay. So here we have wave A. And now we're in the B wave. Wave B will consist of an ABC. Well, there's wave A, and it was beautiful. It was complex, but it was working. It was difficult as it was unfolding. And there are many times you're going to hear me say, we need to let the market tell us. It will. It will show the path. It will make it clear. But sometimes we need to step back. And that's when, even when I'm giving, some of you that follow me day to day, I'm going to give you a morning report or even a daily that's going to give a larger, choices. Could go here, could go there, and everything. Oh, that's wishy-washy. Can't make up your mind. It's like, that's not true. It's the market. It's not me. I'm just showing you the path that's possible both ways. Once the market makes it clear, we fill it in. Then we can give our next levels, and that's exactly what I've done. We came down and we finished this on Friday. We finished the A wave up and did the B wave down and started the C wave very strongly, all on Friday. So when I say that we got to let the market give us a little bit more clarity, it does, but we have to stand back and be able to just work it and be able to do it. And I also talk about this, like this is kind of one of the reasons I am a day trader. If you're a position trader, it could be a little bit more difficult. But even if you're just a swing trader, there were plenty of swing trades in this, both directions. You just had to do them. And you could go to also a lot of the individual stocks within the S&P that are moving and creating these moves. Nonetheless, let's go. We have A, we have B, we're working the C wave. C waves are always 5. So first thing up, A to B gives me the fibs for that C wave. 0.618. Not, there's the most common. Wave C will equal wave A, and that's at 67.36. Above that would be 1.618, which I'm not looking for. But I bet if I put it in, it likely is going to come in close to, just for the exercise, let me just put that out there. And let's check one thing. See where that is? Now I'm going to go here and I'm going to fill in 1.236, which is probably going to come in close. Look at that. You see? 1.236 and 1.618 are sitting on top of themselves. We already know that we're in a flat because the A wave is an ABC. The B wave will be an ABC. 100% is most common. But what if it goes beyond, Michael? What if it goes beyond? Well, then our next level up is 1.618. Well, that we can see is taking us to new all-time highs. Well, what's that mean? Well, let's go take a look at that irregular. Bingo. Right there. Can the market do it? Yes, the market can do it. I mean, is that what I'm looking for? Not necessarily. But don't tell me the market can't do it. That's usually when you're going to get caught and get killed. It can do it. We've seen it. And there it is. All right, not looking for it, but I'm showing it to you. Right, let that go back down here and just kind of talk, because now that would be the C wave. That C wave would really have to explode, and it's going to explode inside that fifth wave of C. Why? Here's one, here's two, one, two, three, four, and actually that's the five, and then this is the four, and now we're in the five. Okay, let me go to that again. There's one, there's two of C. Then we have one of three of C, two of three of C, three of three of C. I think you see me counting it. The four and the five of wave C, but that's wave three. So one, two, one of three, two of three, three of three, four of three, five of three, ABC down, four of C, and now we're in wave five. Now, comment what we do, what are our fibs? We're going to connect wave one over to the bottom of wave four, gives us the indication of the possibilities for wave five. That's in the blue. That's the blue. Wave five would be equal to wave one at 6710. Let's take a step back. Wave C would be 0.618 of wave A at 6705. The B wave would be 0.618 of the length of the A wave at 6705. We have a very nice tight window between 6705 and 6710 that could complete the C wave and could complete the B wave and set the stage for that C wave down. If the market goes through that with some ease, because I'm going to add into this, it's like we have gamma levels. We have gamma levels right around there. So, yep, they exist and they could stop it as well. I don't know how much may be expired on Friday, leaving us open to new levels come Monday morning. But let's just move on. Well, we also have then 6710. So there's our first zone. What's the second zone? Right here. Why? Well, that's where the fifth wave would be 1.618 times the length of wave one. That's at 6723. Wave C would be 0.882 times the length of wave A, and that's at 6726. That's zone 2. Here's resistance zone 1, resistance zone 2, resistance zone 3. And above all of this, we're headed there. So we actually have 4. Okay, here's 1, here's 2, here's 3. Where wave C would be equal to wave A, most common, 6736. Wave B would be 0.882 of wave A, very acceptable. And there's that algorithm level, 88.2, that a lot of people that program algorithms use 0.882. And there it is at 6740. So that's zone 3. And then here's the 100% marker. If we go above, we're into irregular territory, and we realize that wave C would be 1.618 times the length of wave A, second most common, 6785. 1.236 for wave B puts it in a perfect irregular at 6785. You got them. And they're lined up, and they have matches all the way up. So can I say what has more probability than the next? Not really. But I'm going to be looking in order. Now again, 618 would be the third most common. Doesn't mean that it can't happen, right? 100 is the most common. But if we get to here and I can count 5, and trust me, I'm already working on 5, it might just come in right there. Or maybe a little higher. And then we come down. Possible, 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 possible. So we have a lot to kind of go with on Monday. But now at least we have points. If the market exceeds it, it doesn't mean, oh my God, we're bullish, we're bullish. It's like, no, it's just probably going to the next level. It's still correcting. Oh, but it's making new all-time highs. Yep. And we need to allow for them. In a fourth wave position, not uncommon. Not uncommon. Even up here, definitely not uncommon. It's not showing the strength of the market, it's showing exhaustion. And the market will go zip and zip, most likely. I've seen that happen more times than not. Okay, that kind of wraps up all of that. So again, we're progressing pretty well. And what we're looking for is that minute wave 4. Here's our markers. If we only get up to that 6705, then I think we got a fair shot of coming back down and getting into here, into the price territory of the fourth wave of one lesser degree. If we closer we get up to there, well, then I think we're dealing with this, or even higher. If we get totally flat, then I'm going to look for that. If we get up to there, well, then the retracement for wave C would be 1.618 coming down. So, a lot going on. We're going to let the market tell us we have our levels, we have our numbers. Now, next week, I'm not sure, but I know we're going to have economic data coming out. Most important thing to remember about next week is on Tuesday, it's the end of the third quarter. It's going to be, I believe, a volatile and larger expiration that we saw being put into place all last week, rotating between one stock to the next. What do these traders, what do these larger firms, what do they want to keep? What do they want to lessen? What do they want to give up? What do they want to move into? That's what's happening as we move into that fourth quarter. Okay. So, and then I think it's October the 14th, maybe 15th, we start to roll out with third quarter earnings. So we got a lot going on coming into October, which is now, they tell me, notoriously a down month. I've been through Octobers that have been very, very strong. They're saying, well, they're preparing people. Why? Well, because it was that October 1987. I'm like, what? Really? That's what you're going to base this on? Okay. But I guess there is weakness overall in the month of October and also into the month of November. But the month of December, because again, now we're in year end and they want to close the books. And that's going to be a lot of like posturing and whatever they do. So we still have a lot, I think, good trading. And also, folks, the thing is, it's like step away from everything that's happening outside to this country, to the world, and bring it back into this country and how we need to trade. I don't really care if the market goes up or down. We need to make our adjustments accordingly. But what's more important to me as a trader is that there is still trillions, trillions of dollars being swirled around within the equity markets, moved around, trading here, trading there, big, and in options, gigantic. As long as that money remains constant, that we're continuing to see that money trade, I think we're fine. As far as trading goes, I'm not making anything statement outside of that. But as far as trading goes, we're okay. We'll have plenty to do. It's when that money leaves or that money dries up and the volume dries up, then it becomes more difficult to step in and earn your money. Because the moves that we might expect may happen, may be muted, or may be expanded. Again, but right now, trading wise, there's still plenty of money across the board. Gold, precious metals, treasuries, the dollar itself. There's a lot of markets and there's a lot of options and they're all active. All right, that's going to be it. Gone long enough here. Also, uh, I'll do it. I'll do it again probably on Monday. But I do offer a lot of other things. We're running. I'm running a trade room, and I don't know if they actually took it down, but if they didn't, you might want to go grab it this weekend if you've had any thoughts about joining the trade room. I'm a day trader, and basic markets that we trade, NASDAQ and the S&P. And so, and building a really good group of people. I purposely try to keep it on the smaller side. So I'm not looking for 100 people. I'm not looking for 50 people. I'm maybe looking for like 10 more because I want to have open mic. I want people to be able to ask questions. I want people to be able to talk to one another. What do we think? What's going on? And what trades are being put on? So it's a trader's trade room. And if you're a day trader or a swing trader, could be the place to be. www.logicalsignals.com. Go to the trade room tab and you'll get all the information you need. Next update here will be the Elliott Wave morning report on Monday morning.